Hi folks, I'm Will Bridges from 123 Trade, and in this video we're going to talk about how to trade with moving averages and really just how to use the exponential moving average as well as the simple moving average trading indicator tool. So there's a lot of different things that I've seen over the years. I'm going to show you how to find maybe long-term trend direction, short-term, both all in one chart, make a trading strategy from top to bottom in this video. You're going to want to pay attention to what I'm about to show here, folks. So if you like the video, then press thumbs up at any time, whenever you want, at your discretion. Subscribe, ring the bell. There's going to be lots of time-sensitive material on this channel that you are going to want to get as soon as we load it into YouTube so that you can get a notification from the good people at Google. But let's go ahead and get things moving. There's a lot more information about trading with a lot of different traders with tons of experience at Smart Trader and Market Traders. We have up to $22,000 in free trading tools and trading rooms that you can get access to just for funding a trading account through us. So by all means, if you want more information, send us an email to brokers@123trade.com, or by all means, check out the website. You can see a lot of that stuff there. Talking to us is also a good start. But let's get over to the charts themselves. Let's get the show on the road, okay? And I've got the pound cat up here. This is a Forex cross. People use moving averages to trade stocks. They use moving averages to trade Forex. People use moving averages to trade pretty much everything, commodities as well. So all of that said, what I want to do first is show you guys just the quick difference between what the moving average looks like, the exponential moving average, as well as the simple. So here comes the simple. Just type that in here. Go ahead and hit plus. I'm going to go ahead and add the exponential as well. I just want to show you guys the difference between these two. As far as the ways that you might apply them might be very similar, but you guys just need to know that really the most important thing to understand is that the exponential moving average is just going to be a little bit more sensitive. So for us to be able to see that, I need to make one of these a different color because they're both red right now. We're flying blind. Okay, so now if we zoom in here, okay, we can see that our exponential is in blue, and that is waving a heck of a lot more than our simple moving average is. They're both looking at the same period of time. Okay, so if we're looking at this and say, hey, maybe I think this is an uptrend, maybe I want to buy every time my simple moving average moves on top of my exponential moving average. So maybe I would have bought every time that it did this cross, right here, maybe here again, looks like here again right here. There would have been lots of places where I might have bought just using this strategy, and we just came up with this a moment ago. Okay, this isn't something that's groundbreaking by any means. We're looking at one of the most popular tools in trading. So I'm going to go ahead and delete everything I've got on here. You guys get the idea. Exponential is going to be a little bit more sensitive than the simple moving average. Okay, so right now we're looking at short-term trend because we're only looking at 14 candles. So 14 hours. So every time this thing makes this moving average line longer, it's using the last 14 hours of information to paint wherever it is. Okay, so the average is going to move, relatively slow in this scenario. I mean, we're going to be very much right in the middle of our trend. Not a whole lot of pattern for me here. What I want to do is turn this onto something that I can really find a pattern with. I want to be able to look at this and say, you know what? Looks like an uptrend. I'm going to look for a place to buy. Or you know what? This looks sideways. I'm going to look for places to buy and sell. Or you know what? This looks down. So I'm going to look for places to sell. So how do I figure that out with this tool? Maybe I want to get fancy. Maybe I just heard about 192-day vibration law. The 200 MA is very popular. So let's try 192. Okay, so this is going to be, there's two ways really to add more data, and you can increase the period or you can increase the time frame. Okay, so if you want to figure out how this works, make one of the numbers really big. See what happens. Okay, it's just going to make the line flatter and smoother if you use more data. You'll have let's just say your average will be closer to the all-time average as you add more data. So I don't necessarily want the all-time. I'm going to leave it here at 192. I'm going to make this, since it's my long-term trend, a little bit heavier. So it's easier to see. That's what this line is here. If I make that thicker, all I had to do is change that from 1 to 5. Another one of those things that you can test just by making the small numbers big. But the line, I'm going to leave it black. I might make it dashed just so I know that this is my long term. Click Save. Okay, so there's my long-term trend. Okay, and what we're looking at when I zoom out here, I can figure out different strategies to use based on this line and based on a couple other simple indicators in the market. One is that, if we're making highs and lows on both sides of the line, then maybe the market's going sideways, and it showed me that early here. Okay, so we're on both sides of this line. We made highs and lows there. We made another high after that at the top of the same level that this box is, right above our high. So as soon as we got far away from our average, we seem to go back to the average, and that happened for a while. Things like that will happen when, markets go sideways, and this one has been going sideways because the UK is really ramping up bond purchasing from the Bank of England. They're expanding their balance sheet. They're buying their own money to drive up the cost of it. Canada is a commodity-based currency, heavily reliant on selling oil. That's how they make their living. So oil has gone up to somewhere close to $80 over this period of time, and it seems like that rise in oil is slowing down. It also seems that we've got a little bit of a breakout, okay? And we're starting to get higher highs on the top side of our moving average here. So just to show you guys what I mean, okay, we've got higher highs that are going on, higher lows, okay? This is what I'm looking at, okay? So this is an uptrend now, okay? It doesn't mean it's going to go up constantly all the time, okay? It just does mean to me that from a long-term perspective, okay, maybe we come back and we test our average, but from a long-term perspective, this thing might be making an uptrend, okay? Which is, another big indication, if I just clear all this stuff out, of the fact that we've got a bunch of higher highs on the right over here versus this one on the left, okay? So, yes, maybe this thing comes down and it creates a little bit of a higher low situation, maybe somewhere up here, close to where our average is. No gospel in the world, but I've already got a strategy of something that I can do and a way that I can try to make money in this market based on just regressing towards the average, which is a strategy that's existed in pretty much everything forever. Okay, so everything's always regressed towards the mean. Everything always comes back towards the average. You're gonna be up some days and down on others. It's gonna be average. So maybe we come back and we test that. So how do I know if we're coming back towards it? So I've got an indicator on here with my moving average that's giving me kind of a long-term outlook, direction that I might be able to trade towards, direction I might be able to trade, away from. Whatever the case might be, maybe I want to get a closer eye on the shorter term trend, and I want to do it all on this one chart. I don't want to have to open 10 charts. Maybe let's just open a bunch more simple moving averages. Okay, and what I'm going to do is I'm going to open up 4 more of these. Just add them all at once. Okay, and I'm going to spread these ones out. Okay, and I'm going to make, let's just say, this first one here. We'll make this period on this one, we'll call it 30. Okay, we'll make this one 30. We'll make it a little bit thicker so it's easier to see. We'll leave it red. Save. Okay, we'll make this next one here, and I'm just going to make this one a little bit bigger. So we're looking at multiple different time frames. So the smaller periods are going to be more sensitive than the longer periods. Okay, so I've got progressively more sensitive. I'm going to put them, a reasonable distance apart from one another. We'll make this one 40. We'll leave this one red also. And we're just going to work our way down. I'm creating my own trading strategy real quick. And you can do the same thing. All you got to do is come in here and calibrate all this stuff. And there's a lot of indicators, as you saw on the list, so you could use a bunch of different kinds of indicators and mash up trading strategies, and you could be the ultimate guru. That's totally up to you. 50. And we'll make this one a little thicker too. And we're going to make this one blue. Save. All right, and now I've got one more I want to change. And we're going to make this one 60. We're also going to make this one blue. And we'll make it a 2 also. Save. All right, so you guys get the point. At this juncture here, actually, we've got one of these we did not make thicker, so it's going to drive me crazy. Fix that real quick. Line 2, that's good. Must be this first one here. Here we go. Maybe not. Maybe not. It is this one down here. Just want to make sure we've got something that's easy for me to see, because the whole point of having an indicator and having an indicator set like this, and a strategy, is making it something that I can look at quickly and think, okay, there might be a move coming soon. For one of 2 reasons. Okay, the wider these bands get, okay, that's an indication of stronger trend upward to me. okay, the wider that these get, because that means that the longer term trend took longer to catch up to this fast moving short term trend. Okay, that's what happened in this movement up. Okay, and that's where we broke out. Right now, we've got these lines bunching up here, and it does look like my red line that's been on top might be crossing over and coming down below. Okay, so that's something that you could confirm pretty quickly, okay, with something like a trend line. Okay, so there's our trend line. We've got a trend line break towards the south. And maybe this thing wants to come back, test my long-term average, and then maybe it goes up. So I've got two options. I could trade towards it. I could set a pending order. I could actually, even third option, I could turn on a robot, check my work, and have it use this indicator as my just trend finding tool. I could go look at another pair. Maybe I don't like this one. Maybe I go look at the Euro USD. And I don't have to do a ton of analysis to figure out what the trend might be, because I've got all of these tools here to show me that, hey, we're below my long-term EMA line. It looks like my red lines just crossed over from the top towards the bottom. Looks like we just made a lower low. Looks like this thing is a downtrend to me. Okay, and you could look at previous weeks in the past. We were above this line for a while. Every time that our red crossed over to the top would have been a great opportunity to buy, and I'll show you guys where all of those happened. You should just use an arrow for that. But that happened here. It happened, actually, let's lock this tool. Happened there. It happened right here. It happened right here. It happened right here. You guys get the point. Everywhere that's above my line is where I might have wanted to do that. But all of those, the market continued to rise. Okay, so that's the point. That's the point of this that's important. And as soon as we got underneath our longer term trend is really when we started to need to look for sells. So I'm going to get all this stuff out of the way here. But long story short, okay, you can make a lot of different strategies with this. There's a lot of indicators that exist in the world. The whole point is for you to just figure out, hey, what might be a good thing to look at? Maybe I'll show you guys Yum Brands real quick. This is a stock. Okay, so this is a totally different feel than trading Forex. And if we zoom out here, pulling all the data, because the indicator does need to be able to read, the last 192 candles at least for my strategy. So I'm going to pull all this data in. Okay, and this is Yum Brands. This is a stock. Okay, so right now it does look like Yum Brands is making a little bit of a downtrend move. It may actually be a sell right now. We are just testing the bottom side of our trend line. Maybe we're breaking out. This thing doesn't spend a whole lot of time going down. This is KFC and Taco Bell, and I think Pizza Hut. So it's really been an uptrend most of the time. It's above this line most of the time. So this doesn't look like something that I'd really want to try to short. But maybe I would look for a place to put a pending order in here somewhere down, around $112. Okay, so maybe I'm not interested in selling towards that area. Maybe I'm interested in buying it right now. It's kind of poking its nose up above our average. It did just make a new high. This might be a great buy today. It's been as high as the 120s, 121 plus, days ago. So this thing can be used on a lot of different instruments, and we just built it now in a few minutes with a free indicator that pretty much, a lot of people use, maybe not a lot of people have really hammered down, but there's a lot of things you can do with it. Really, the name of the game is to figure out a pattern for yourself, something that makes sense. You can calibrate it for the one currency pair you like to trade, or the one commodity you like to trade, or the one, stock that you like to trade, and just go back and look and back test and see how good it worked. And if it worked really well for the last 10 years, then by all means, maybe try to use it for the next few years and see how your strategy works. That's really what building trading algorithmic strategies is all about. You just have to understand what the indicator is doing, how to figure out, what tells you what, look for a signal, light switch, turn it on. But really, end of the day, there's a lot of strategies out there. A lot of them work. A lot of them, really just comes down to the way you manage your risk. We've got more videos on that. It might pop up for you to watch right at the end of this video. But if you like the content, then press the thumbs up button. By all means, support us in the easiest way possible. Subscribe, ring the bell. There's going to be a lot more content to come out here. There's a lot of it on our website on 123trade.com. 123trade.com/premium is going to have up to $22,000 in free education and tools that you can get access to just for funding a trading account through us. So I look forward to trading with a lot of you watching this video on Friday live. Otherwise, the rest of you be good or be good at it. Again, I'm Will Bridges from 123 Trade. Take care, folks.